Was wondering if we could do a really deep dive into emerging markets and if that should be part of my asset allocation. For myself, I'm 100% equities. I really was able to tolerate the Corona bear and was 80-20 at that time and went to 100% equities because it didn't really phase me. I also added a 10% small cap value to my portfolio, but I'm also 65% total US and also 25% total national. Among that total international, there's already 30% that is in emerging markets. I do want to boost my return as much as possible on a risk adjusted basis. I'd like to boost as fast as possible too, or as long as possible, so my wife can actually maybe stop working. The emerging markets I know is less correlated to the rest of the international as well as the total US. Although, will that really decrease risk in terms of not just decreasing volatility, but actual what you're exposed to in emerging markets? I can tolerate volatility, so I don't really require the difference in correlation. I know that emerging markets has a small in value factor compared to other more developed markets, but also it seems like you might be increasing risk. A lot of emerging markets mostly is China invested. There's also the inflation, deflation, confiscation risk of these governments, also currency risk. I was wondering if it's really worth adding and you really get a premium on this on a risk-adjusted basis.
Okay, so we're talking about emerging market stocks here, right? What does that mean? Well, let's take a look at what is in the Vanguard Emerging Market Stock Index Fund. If you look at that, you will see that 44% of the fund is invested in China, and another 17% is invested in Taiwan. Now, whether Taiwan is part of China or not depends on your political perspective, but the bottom line is more than half of the fund is in China and Taiwan. So anytime you are overweighting in emerging markets in your portfolio, what you're really doing is making a bet on China. And so if you think China stocks are going to outperform the rest of the world, sure, overweight emerging markets. If you don't think so, if you think they're going to underperform, underweight emerging markets. If you have no idea, like I do, just buy them at the market weight. And so I don't have a specific emerging markets allocation in my portfolio. I own all the emerging market stock, but I do so through a total international stock market index. And what you get when you do that, when you have that sort of a fund, is you get a fund that is approximately, I think it's 26 or 27% emerging markets right now. The rest is in Europe and in the Pacific Rim, mostly Japan. And then, of course, the rest in emerging markets. So is there a premium for tilting your portfolio toward emerging markets? Well, this is a fascinating question because you have two options to figure this out. The first one is you look back at the past and see if there was a premium in the past. And given their relative underperformance against U.S. stocks over the last 15 years, you're probably not going to see one. That's a totally different question then as to whether you're going to see a premium for tilting your portfolio toward emerging market stocks going forward. Now, I think everybody agrees that the Chinese stock market is going to become a larger portion of the overall world stock market over the next 10 or 20 or 30 years. Of course, we also thought that about Japan back in the 80s, and once it peaked, that hasn't necessarily been the case. But most people agree that China is probably going to be a bigger part of the world stock market in the future than it is now. That doesn't necessarily mean the returns are going to be higher, though. There are a lot of unique risks in emerging market countries that don't exist in developed world countries, much less in the U.S. And so you should be cognizant of that. And I think for the most part, most U.S. investors are not equal weighting their portfolio across all equities in the world. Most of them have a significant tilt toward U.S. equities. And I think that's fine, especially if you plan to spend dollars in your retirement rather than another currency. But it's interesting, if you look at the performance over the last 15 years of the U.S. stock market, you'll see that the average return has been 10.2%. And if you look at the performance of emerging market stock over the same time period, the return has been 5.74% per year. So it's significantly lower. Not quite half, but pretty low. I would not, however, make the mistake of assuming that's going to be the case going forward. It would not surprise me one bit to to have emerging market stocks outperform the US stock market over the next 10 years. In fact, if I had to bet, I would probably bet that way. Luckily, I don't have to bet. My financial plans don't require me to know whether emerging markets are going to outperform the US over the next 10 years in order to reach my financial goals. And I would encourage you to set up a financial plan such that you don't have to know that either. You talk about wanting to have your spouse stay home. The best way to get there reliably, as close to guaranteed as possible, is to stick with a reasonable investment plan and fund it like crazy. If you really want to reach a goal faster, the better way to do it is usually to earn and save more money rather than to try to take on more investment risk. It just doesn't move the needle nearly as much. So I own emerging market stocks. I think it's a great asset class. I think it belongs in your portfolio. For the vast majority of people, I would be a little bit hesitant to really put a huge amount of your portfolio into it. So in my case, about 1/3 of my stocks, so about 20% of my portfolio is in international stocks, and apparently about 26% of that is in emerging market stocks. So what does that work out to? I guess about 5% of my portfolio is in emerging market stocks. If you want to put 10% in yours, I don't think that's crazy. If you want to put 25% of your portfolio into emerging market stocks, I think you're probably making a mistake. If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.